Hello and good evening. This is Doc Severson for the ReadySetCrypto Premium Newsletter Market Update for Thursday, December 20th. Now, I'm recording this at on the 21st at about 1:15 in the morning UTC. So we've rolled over to the next day. But what I wanted to start out with today is the S&P 500, which is the U.S. stock market. It's the main index benchmark for the U.S. markets. 500 biggest companies out there in terms of market capitalization, and it is down not quite 20%, not quite a bear market yet, but a serious correction that's got a lot of people very rattled. And actually this one's ahead of the Russell 2000 and the NASDAQ, which are both below 20% correction already. Now, what on earth does this have to do with the cryptocurrency market? Well, problem is that this has been in, and if I go out to a monthly chart, let's go to a monthly chart here. This has been in pretty much a 10-year uninterrupted bull market. You can see this monthly chart here just has not stopped. And this has been either the beneficiary or the victim of quantitative easing through various federal and governmental policies out there. And this is one of the reasons why we've had this. And quite frankly, one of the reasons why Satoshi Nakamoto did his infamous white paper 10 years ago. Well, it's funny because the Fed created this sort of asset inflation to the point where the people that it was supposed to help actually hurt them because all of a sudden they could not afford to invest in these assets. Well, all of a sudden the bubble has burst and it's coming back in again. So how does that affect cryptocurrency? Well, cryptocurrency's already gone through a wicked bear market, already gone through 70-80% correction. So where do you think money's going to go to right now? Interest rate bearing investments? I don't think so, because right now rates are starting to come in, even though the Fed has raised the rate again. Oddly enough, the 10-year note continues to come in, and so interest rates are actually dropping. So let's go out to crypto. Here's Bitcoin. And maybe, just maybe, this is turned into digital gold, a storehouse of value in troubled times. Interesting that we've seen a 4-day rally in Bitcoin specifically and crypto overall on pretty good volume as the rest of the equities market continues to get absolutely obliterated. On a side note, I think this is hilarious to look at articles like this. Is it's time to abolish the Federal Reserve, embrace tax-free crypto. I think history will judge yesterday's interest rate hike very, very harshly, and actually may have put the nail in the coffin for this instrument, especially if the U.S. stock market ends up going into a full-on bear, which we're very, very close to it. So again, what I care about right now is this. I think this is intriguing. Well, I don't believe that this is going to lead to something, you know, like a lot of people are already starting to anticipate, hey, Bitcoin 6,000, 7,000, here we go again. Here's the liftoff. It doesn't work quite like that. So you got to earn your way up there. So first of all, what Bitcoin has got to do is get above this $4,400 level. And then, and only then, can it be taken seriously. Now, I take a lot of guff from people saying, well, why don't you buy the dip? You know, what are you doing? Why are you wasting? You could have got in here at 3,200 and you've wasted 800 points of value. Are you nuts? Well, the problem is, let's go down to here. And what about this tells you that the price is going to reverse? So you might say, well, all right, but there is that green candle right there. What about that? Well, so what? Right? It's still a primary downtrend. And then you might say, well, what about this green candle? Why didn't you buy in there? And it's on pretty good volume. Well, show me the reversal. There's no reversal. Even this is still not a reversal yet. A reversal is when you see this coming along. So this is a reversal when a former downtrend with lower highs and lower lows, all of a sudden there's one of two ways that it reverses. Either prints a higher low and then a subsequent higher high. So above this level right there, that is a change in polarity or a reversal. That's one way to do it. The other way to do it is, assume we're making lower highs and lower lows, is if the price just outright comes up and outprints the former high, forms a new high, comes down, forms a higher low, that begins the process. It's actually not confirmed once again until it actually prints a new high. So I am willing to give up this level of edge. So whether or not it's this level of edge, this space in here, or if I have to, as much as this level of edge before I reinvest into this. Because in the long term, it really doesn't matter that much whether or not I give up just a few hundred points of edge here before I use my precious trading capital to invest in a long asset. I want to trade things that are going higher in price. It's a simple concept, but it requires patience on your perspective. Now, I know that this is a difficult concept to not only internalize and recognize and acknowledge, and a lot of this is just because of this constant drumbeat that's throughout the social media channels, which have turned into the educational channels. We no longer have educational TV or any kind of authoritative source that we can learn something from. It's all en masse. And so what you have here is you have, if enough people say the same thing and they yell it loud enough, then it's taken as gospel. And the problem that I have with the buy the dip crowd is, once again, if you go back to the buy the dip crowd, okay, so here we go. We're on a downtrend. Let's buy the dip. It's pretty good volume. All right, let's buy the dip. Oh, crap, let's buy the dip. Let's keep buying the dip. Let's keep buying the dip. Where do you stop that? Where do you say, okay, that's enough? You don't know where the bottom is. You have no idea where the bottom is. Buying the dip. So it's very simple. Wait until things start to rise in price. And not just rise in price, but change polarity to the upside. So there's a difference between me chasing after a 4-day rally, and this is not an uptrend, folks. This is not an uptrend. So let me show you what would take to make this an uptrend. So again, if we just take today's candle, one of two things have to happen. Either this has to pull down into a higher low and then print above here as a higher high. That's one way for this to happen. The other way for this to happen is if the price does this, continues higher above 4,400, pulls down, makes a higher low, higher high. There we go. There's the confirmation. Now we can play in this swing. Now, even if we do get the signal, realistically, it's unlikely to go mooning, right? It seems to be the verb that everybody likes to use these days. More than likely, what will happen is we're going to see a series of pretty strong swings in here. I believe that the first half of 2019 is going to be characterized by ridiculous volatility. Not that we haven't had our share of it over the past year, but I think we're going to have a lot of wild volatility. This is base building. This is base building. If you want to see an example of what this looks like, go back in time. Go back in time, back here to this area right around, let's see, where was it here? Okay, almost there. Okay, it was right around here. Okay, there we go. Here's the capitulation bottom. Bang, 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 bang. Look at all this base building that occurred in 2015 before it finally said, you know what, guys, I'm out of here. And you'll know it when it's time for this to leave. So ask yourself, was it really worth it buying on the dip down here and then dealing with all of this noise, or was it more worth it to wait until something started printing higher highs, higher lows, and then get on board the train? Hang in there, guys. Help is on the way. Hope to see you guys in Friday's trade school. I don't know exactly what time I will be giving trade school, but it should be sometime Friday afternoon Eastern time. We'll see you there. Take care, folks.